Okay, dear students, this is Mustafa Mirchawala, your FR trainer from Mirchawala of Accountancy, and today we are going to discuss F7 FR Pre-Mock June 25 consolidation question. Okay, and before we move on, as usual, let me share some good results with you for your motivation with of recent attempt. Normally, I share with in every attempt. You have seen on my YouTube channel as well. So you can see if you see the list one, we have the highest of 90, 87, 86. See, you can see these scores. Then you have list 2, list 3, list 4, list 5. Okay, so it's like more than 100 results we have compiled. So when these students can clear, why can't you? They also followed the same strategy, they also followed everything same what you guys are doing. So why you can't do it? You can also do it. Just follow the instruction of your teacher and watch the lectures, watch revision days, solve the mock exam. You can easily do it. Okay, so now without wasting any time, let's move on to our question. That is pre-mock question of consolidation. Very good question, very good learning. Something new in this question as well. I'll highlight you. There are ordinary normal things as well as something which is new, right? So this question is linked to consolidated SOCI. Consolidated SOCI. Okay. So the scenario relates to two requirements. On 1st April X8, Peasant Company acquired 85% of the equity share capital of Process. Okay. So be careful with the date. The year end is 31st December X8. So this is the part year acquisition case. Like you acquired on 1st April and your year end is 31st December, so you need to consolidate 9 months. We need to consolidate 9 months adding together with the subsidiary. Okay, now, and Rose is your subsidiary. Now Peasant has also owned 35% of the Daisy since 1st June X7. So now this is associate, and we bought this associate last year. Okay, so for if I talk about this year, you need to take complete profits of Daisy. As for associate share of profit, you need to take complete profits of Daisy for this year, because yes, this year associate company was belongs to us for the complete year, right? Okay, see the dates, see this date for associate and this date is for subsidiary. Okay, now, so you have these three companies. Now you know the rules. Only adding together is done between these two, parent and subsidiary. Adding together is always done between these two. You cannot do adding together with this Daisy company. With this Daisy company, you just have to do associate share of profit. You just have to calculate associate share of profit. Okay, right? Now what our approach will be, listen. First, I'll discuss each and everything of this question. I'll teach you manually, and then I'll shift myself to the Excel file, and there I'll explain you everything on Excel, right? Okay. Now, so adjustment number one, please be active and nothing is difficult. You have done everything in the class. So a fair value exercise conducted on 1st April X8. Yes. So whenever we do acquisition, whenever we acquire a subsidiary company, we normally do fair value adjustment. Okay. Concluded that the carrying amount of Rose's company's net assets were equal to their fair values with the exception of an item of machinery which had a fair value of 10 million in excess of its carrying amount. Okay, so yes, this is upward fair value adjustment, but as you all know, in the income statement question, you don't post anywhere fair value adjustment. You are not required to post fair value adjustment anywhere, but yes, the excess depreciation should be adjusted. So on 1st April X8, the machinery, as we all know, that machinery is a depreciating asset. So you need to do excess depreciation thing. Had a remaining life of 5 years. So very easy. Your excess depreciation will be 10 million divided by 5 years. This will come as a per year. See, 10 divided by 5 is per year 2 per annum. 2, it will be 2 million, but in this question we have to go without 30. So 2 million means 2000, 2 million means 2000 per annum, and per annum is 12 months, per annum is 12 months, but the gap between acquisition date and the year end is only 9 months, so you need to calculate for 9 months. So 9 months excess depreciation is 1500. 9 months excess depreciation is 1500. Now as you all know the rules, listen, you have, this is revision days, this is not a normal class, you know the rules. This excess depreciation will be added in consolidated cost of sales, number one. This excess depreciation will be added in consolidated cost of sales, number one. And number two, this excess depreciation will be deducted from S company's profit after tax in the calculation of NCI, right? When we'll be doing NCI working, this excess depreciation will be deducted from S company's profit after tax, definitely 9 months profit after tax. Okay, and you know these things, you have done the classes. Okay, so this is adjustment number one. In adjustment number one thing you have to do, this excess depreciation, only this adjustment. Fair value adjustments are never posted in consolidated income statement. Okay, only fair value adjustment. And I'm giving you time, just relax and read it. You have done this adjustment number one before many times. This is ordinary adjustment. I sometimes say this is cash marks. Now, since acquisition, Peasant Company has sold to Roses Company totaling 25 million. Roses, now P2S sale, P2S sale, P2 intercompany sales, okay, P2S sale of subsidiary. For 25 million, Roses Company had one quarter of these goods in inventory at 31st December X8. Okay, during the year, Peasant Company sold goods P2A as well, sold goods to Daisy P2A as well for 26 million, all of which Daisy company, all of which complete inventory is with the A company, okay, associate, held at 31st December X8. All of these goods had a markup of, okay, easy. So first of all, let's do P2S sale. Listen, P company sold goods to S company for 25,000. Okay, write SCP, sales cost and profit, percentage and dollars. Okay, so the selling price is 25,000. Now they have given you markup. In markup, cost is always 100. This is 35, so this is going to be 135. Now can you calculate 25,000 divided by 135 into 35? 25,000 divided by 135 into 35. First calculate the total profit. First of all, calculate the total profit. 6481. Okay, I'm rounding it off. Now out of this 64, this is the total profit. Now how many goods are unsold at the year end? They are saying, see this, 1/4, see, 1/4, this is the wording, 1/4 of these goods in the inventory. Okay, so 1/4 is your URB. 1620. Your URP is 1620. URP is 1620. Okay, now what about P2A? What about P2A? In P2A sale, in P2A sale, parent company sold goods for, parent company sold goods for 26 million. It's 26,000 now. Wait, So if I write like this, S, C and P, sales is 26,000, draw the line, percentage in dollars, in markup cost is always 100, this is 35 and this is 135. So 6741, and all of the profit, all of these goods are unsold, so this is complete URP now. In case of associate, this is complete URP, but be careful, there is a difference between subsidiary and associate. Subsidiary and associate, whenever you are solving for subsidiary, you make double entry for complete unrealized profit, but whenever you are solving for associate, you first multiply your URP with the holding percentage, and the holding percentage is, I think, how much, 35%. Holding percentage is 35%. So now you will get the amount of adjustment. 2360. This is your amount of adjustment, and this you will be adjusting. This is the amount of adjustment. Now how to adjust this? Very easy. When the sale is P2A, just listen to me. When the sale is P2A, when the sale is P2A, so unrealized profit is booked by parent company. Unrealized profit is booked by parent company. Listen to me. So unrealized profit is present in the parent company's income statement. Unrealized profit is present in the parent company's income statement. So when you will do adding together, it will automatically be shifted to consolidated or group income statement. So now you need to remove only one time from group income statement. And how you do it? By adding or by increasing cost of sales. So simply increase your cost of sales with this amount. Simply increase your cost of sales with this amount, and you are done. You are done. You are excellent. You are done and you are excellent. Okay. Right. So these are routine things. These are not exceptional or extraordinary thing. Now, the investment, the investment income of Peasant. Now this adjustment, only adjustment, this is technical in one aspect only. Technical. The investment income, now don't sleep please. The investment income for of Peasant company for the year ended 31st December X8 includes the dividends from Roses and Daisy. It also includes, now it's, this is $1 million line. It's also include 5 million interest in receivable on a loan made to Roses, means P2S loan, means parent company given loan to S company, parent company given loan to S company. Okay, so parent company is going to book interest income, parent company is going to book interest income, and subsidiary company is going to book interest expense. But in the group income statement, you need to cancel this. Okay, now read again. It also includes 5 million interest receivable on a loan, listen, made to Roses on, this is the line, 1st April X8. That means on the acquisition date. On the acquisition date, which is 1st April X8, and your year end is 31st December X8, so it's only 9 months. So this interest income and interest expense is purely a 9 months thing. This is not a 12 months thing. It's purely a 9 months thing which is going to be removed from both. And it is purely 9 months thing. It's not a 12 months thing. Be careful with this. This is 9-month thing. I am writing it again. Okay, this is a 9-month thing. Now, also they are saying that the investment income of Peasant company include dividend from Roses and Daisy. Now let's see what are the dividends. Roses company paid a dividend to shareholders of 13 million on 31st December X8. Now out of this 13 million, listen, Roses means subsidiary. Roses means subsidiary. Roses company means subsidiary company. Okay, right? So we have a holding of 85 million, 85%. Sorry, we have 85% holding. We have 85% holding in subsidiary company. Now subsidiary company gave 13 million, 13,000 dividend total 13,000 dividend. So out of this total dividend, how many dividend will come to parent company house? It's 85%. So 13,000 multiplied by 85% is 11050. Okay, so 11050 is present. Listen, 11050 interest income is present here in this investment income. Okay, in this investment income. So from this 56,500 we are going to subtract, first of all we are going to subtract the interest income of 5,000. There is an intercompany interest income I just told you, and then we are going to deduct 11050. Then we are going to deduct 11050 of dividend income. Okay, also we have received dividends. Parent company also received dividend from associate. Now how many dividends they received? It's 29 million, and this is the C. Parent company received from, we have holding of 35%, and the total dividend given by associate is 29,000. So how many will come to our home? So 29,000 multiplied by 35%, it's I think 10, wait, let me check again. It's I think 10150. Yes, 10150. Now wait, listen very carefully. The dividends which are received from associate company, the dividends which are received from associate company should be cancelled from consolidated books. Yes, but they are automatically included in associate share of profit. They are automatically included in associate share of profit. Why? Because how we calculate associate share of profit? Listen, we use a company, associate company's profit after tax multiplied by holding percentage. So when you take profit after tax of associate company, that means automatically the dividends are included in it. Okay, so from this investment income we'll also deduct, see, 56,500, 10150. Now this is going to be this residue will be your correct, correct investment income. Now wait, this is for parent. And what about the subsidiary? For subsidiary you will take 9 upon 12. For subsidiary definitely no cancellation in investment income, but yes, as you have to include each and everything of this subsidiary into 9 upon 12. Okay, this is how you will solve this investment income line. This is major line. Now one quick question. In this investment income, see, in this investment income there is a 5,000 interest income. In this investment income there is a 5,000 interest income included. So that interest income is also the interest expense of subsidiary. So in this 13,000 finance cost, there is a 5,000 included, 5,000 expense included for intra-group transaction. See, there was a loan which was given by parent company to S company on 1st April X8. See the date. See, I have highlighted the date. On 1st April X8. So there is a pure 9 months interest expense included here. So now what you will do, you will first remove that 5,000 from this, like this, 13,000 minus 5,000. You will remove it first. Okay, now the remaining the remaining amount is 8,000, and that 8,000 is a pure normal interest expense for 12 months. So you will then multiply it by 9 upon 12. Okay, right? And what about the finance cost of parent company? Yes, you will include this complete. You will include this finance cost complete. I'm giving you a break. Just think over it about these two transactions. And one more thing I would like to say, in this 13,000, see, there is a 5,000 interest, listen to me, 5,000 interest expense included, and that interest expense is purely the last 9 months. That's why I removed it completely. That interest expense belongs to pure last 9 months. Okay, right? Be careful. And you know, this 5,000 transaction I have to correct when I will be doing the NCI thing. See, for NCI we need to use S company's profit after tax. That will be the most technical part. In the end I'll discuss. Okay. Now, finally, then they are saying, all items of the above statement of profit and loss and other comprehensive income are deemed to accrue evenly over the year. Now, no problem. Now the rest. See, this revaluation OCI thing, gain on revaluation is purely belongs to parent company. There is no OCI for subsidiary company. There is no OCI for subsidiary company. Okay. Now, my dear student, the most technical part of this whole question I'm going to discuss. Let's pray that you can grasp it. In this question, finally, you will have to calculate NCI. Finally, you will have to calculate NCI for income statement. Now the simple formula, listen to me, please look at here. Simple formula for NCI is S company's profit after tax. S company's profit after tax multiplied by the holding percentage. Okay. And yes, we need to do it 9 upon 12. Now the first issue. This is S company's profit after tax. Okay. But this 283450 has an impact of this 13,000. From this 283450, the finance cost has been deducted, and in this finance cost there is a finance cost of 5,000 which purely belong to last 9 months, okay. So the last 9 months owners must bear the burden of it, that 5,000. So let me explain you. See this. This is 283450, and from this 283450 there is a finance cost, interest expense, or you call it finance cost. Interest expense of 5,000 already been deducted. Okay, and this 5,000 purely belongs to last 9 months. Okay, so in other words, those who are owners of last 9 months, they should only bear the burden of this. Those who are owner of subsidiary company for last 9 months, they must bear the burden of this. No other party. Okay, but what if I do, if I divide this into, see, 3 upon 12 and 9 upon 12, if I do like this, if I divide this profit into 3 upon 12 and 9 upon 12, so what unfair thing will happen, that the burden of this 5,000 will come on these first 3 months guys also. If I simply do 283450 into 3 upon 12 and 9 upon 12, so the burden of that interest expense will be divided between these two parties, and which is unfair because this interest expense purely belongs to last 9 months, because the loan was taken on 1st April. Read the lines. Loan was taken on 1st April. So unfair thing will happen. Now make it fair. Let's make it fair. I have one very good idea. Listen. See, the idea is, first of all, add back this amount. 283450 plus 5,000 will give you 288,450. Okay. So you have calculate, see, plus 5,000 you have added back. So this will be 288,450. Now what you have to do, now you can do 3 upon 12 and 9 upon 12. Listen. This is 72112.5, although first 3 months is not required, as I'm doing. 216,337.5. Okay, now I have first distributed these two, but the problem is I have added back complete interest expense. That means it has not been deducted from anywhere. Now you tell me from where should I deduct? See, now I will deduct this 5,000 complete from last 9 months. So I will get 2166. See, this is my honest, I would say the word, this is my honest and fair profit of last 9 months, which I should use for NCI, okay. So this is a special thing which I have been teaching for last 20 years, this paper. And I came across such question in 2008. I remember 2008 this question came, and now again they are giving this question in the mock. Let me repeat all this issue in Urdu language, okay, because there are some students they are comfortable with Urdu language, okay, just few words of Urdu. देखें जो 283450 था ना, इसमें से एक 5000 का इंटरेस्ट ऊपर लेस हुआ था, और वो 5000 का इंटरेस्ट प्योरली लास्ट 9 मंथ से रिलेट करता था. तो जब वो प्योरली लास्ट 9 मंथ से रिलेट करता था तो उसका बर्डन सिर्फ लास्ट 9 मंथ्स के ओनर्स पे आना चाहिए, ना कि पूरे साल के ओनर्स पे. तो मैंने उसको पहले एड बैक करा, उसका इम्पैक्ट ही खत्म कर दिया, फिर आपको 9/12 और 3/12 कर लिया, और प्योर लास्ट 9 मंथ्स का प्रॉफिट ऐसा निकाल लिया जिसमें कोई इम्पैक्ट नहीं था इंटरेस्ट का, और फिर पूरा इंटरेस्ट कंप्लीट इंटरेस्ट इसी में से लेस कर दिया. तो अब ये एक ऑनेस्ट प्रॉफिट आ गया जिसमें पूरा ये 5,000 का बर्डन लास्ट 9 मंथ्स वालों ने बेयर किया है, और मुझे लास्ट 9 मंथ्स के लिए एनसीए निकालना है. ओके, सो व्हाट आई विल डू, सॉरी व्हाट आई विल डू फॉर एनसीआई, I will use this profit 211337, 211337. Now let me check, this is with the 3 zeros, yes it is. Now less I will do excess depreciation. There was excess depreciation in this question of 1500. Remember, there was excess depreciation of 1500. I explained you this, note number 1. And yes, there is no S2P sale. There is no S2P sale. There is only P2S sale. If there would be an S2P sale, then definitely I'll adjust URP here. So can you tell me what will be the answer? Oh, wait. Okay, now this is your final adjusted S company last 9 month profit, and the holding percentage is 15%. So if you multiply it by 15%, 0.15, 31475, this is your NCI. 31475, this is your NCI. 31475 is your NCI. Okay, so there is a special calculation in this question which you guys must know. There is a special calculation in this question, especially this thing you must know. Okay, now let's talk practically. We are in the practical world, and I am a very practical person, straightforward. If in the exam there are many students, I would say even a position holder guy, even a guy who score in 80s, he or she can also miss this part. So if you miss it, you will lose 1 or 2 marks. It's very normal. If you miss this calculation, your NCI figure will be wrong. So NCI figure means 1 mark or 1.5 mark. So yes, you can do mistakes. Yes, we do mistake. That's why students score 70, 65, 60. How many of you scored 100? Nobody. Okay, so go practical. In one big question, there are few things which you miss. Yes, it's very normal. So as right now I'm teaching. So as a teacher, I have explained you this thing. But in the exam, there is a possibility you may miss this out. So it's okay. No problem. 1 mark. Just do charity of 1 or 2 marks. No problem. No problem. You are a rich man. Now finally, first of all, you need to take the picture of this part, because I'm going to move the screen. So first of all, take a pure picture of this part, because I'm going to shift to Excel part. And there is a 3 mark requirement. of theory. First I'll teach you that theory part, and then I'll be changing the screen. Then I'll be changing the screen. Okay, so this is the 3 mark requirement, which is a new standard, and it is also included in my course. In my LMS, it is also added, right? So P Company is a publicly listed manufacturer of food packaging materials. Peasant Company has been implementing sustainable practices in its business operations and aims to further integrate sustainability into its business activities. Very common nowadays, everywhere. Recently, we went to Qatar. So in Qatar, you remember a few years back there was World Cup. So we saw some movable stadiums, like they made a stadium with containers, so it's movable. So basically, these are sustainable steps. So there will be less wastage in future. Sustainability into business activities to address growing environmental concerns. However, the company is not yet familiar with IFRS sustainability standard S1. S1. They are talking about S1 only. On the general requirements for the disclosure of sustainability related financial information. Yes, you have S1 for disclosure. Now provide a very short explanation of the IFRS sustainability standard S1. Just you need to write the starting line scope. General requirement for disclosures of sustainability related. See, this is just the name. This is just the name. And its importance. Two things. See, first of all, they are asking a brief explanation of requirements. And secondly, they are asking about the importance. These two things. And importance to which people? Peasant Company and its stakeholders. Why this is standard S1? Why working on sustainability is important for the company as well as the shareholders. Okay, so let me explain you with the theoretical area. You will understand in within seconds. You will understand. I'll explain you. See this. You don't need to write this much detail. You have to write some points. First of all, the first requirement, the S1 standard requires companies to disclose material sustainability, number one, risk and opportunities. Remember when I taught you these two things, risk and opportunities that could affect their finances alongside their regular financial statements for better investor decision making. And you know that if you don't work on sustainability in the long term, it will affect your financials. It will affect your financials, right? Okay. This promote, now this is extra lines. This promote transparency on the environmental, social, ESG, environmental, social and governance factors of impacting company's future. Now, this area is about the first requirement. What are the general requirements of this standard to disclose? These are risk and opportunities that could affect their finances alongside their regular financial statement. Now this is the importance. This is the important point number one. Wait. Now this is the importance. For Peasant Company, understanding and implementing is crucial for several reasons. These are the important. Number one is transparency and stakeholder trust. If you disclose what you are doing for environment, if you disclose what you are doing for the sustainable growth of the company, then this will be more transparent and shareholders can trust the whole process. See, adherence to these guidelines facilitates transparencies by ensuring that Peasant Company disclose comprehensive standardized sustainability related financial data. So there will be more trust of stakeholders on the company if you disclose this. Okay, they will come to know what you are doing for the environment. They will come to know what you are doing for the environment. Second thing, investment decision making. Definitely, I told you that these climate related things, these environment related things ultimately affect your businesses. I give you many examples. You see, there is a climate change in this world. We have seen. So because of climate change, it is impacting your tourism. Yes. Even sometime I plan certain destination and in the end I cancel it because I plan it to enjoy the winter season, the cold weather. But now even in some places the September, August is not cold, so sometime in we go there and we don't enjoy because of the hot weather. So there is a climate change. This is impacting the hotel sale, this is impacting the airline sale, everything. I'm just giving you one example. Similarly, this climate affected the cities, countries as well. In Pakistan, there was a huge flood few years back, and because of this, our country lost billions of dollars. And just think, if our company lost billions of dollars, so we'll have to take more loans. It will impact our reserves. It will affect our currency. It will affect our interest rates, future decision making, many things. Just think. So by providing relevant and reliable sustainability related financial information, Peasant Company enables investors to make more informed decisions. If you tell them the risk, what risks are involved, environmental related risks are involved, they will be able to do better decision making right from now. Then regulatory compliance. Now what is this? Listen, if you read the newspaper, if you even attend the ACCA conferences, if you see the videos of ACCA heads like CEO of ACCA, Helen, normally they speak, normally in each and every speech they discuss about this sustainability thing. Why? Because not only IFRS but the local laws, local regulations in each and every country are increasing for this sustainability related thing. So just think, if I am going to expand my business in another country, so for in that country there is a local law. Let us say there is a local law requirement that you need to meet all these sustainability related disclosures. So if I'm using IFRS and in IFRS this standard is already there, so I'll have ready-made financial statement that comply with the local law of that country as well. So it will be easier for me to expand. It will be easier for me to go in other countries and do business. Okay. It will be easier for me to link with their compliance requirement. Read it. As countries worldwide are increasing, as countries worldwide are increasingly incorporating sustainability reporting into their regulatory framework. See, compliance with IFRS sustainability standard 1 would assist. See, would assist means would help Peasant Company in meeting these legal obligations. It will be easy to work in other countries as well. Okay, right? So you don't need to write in such detail, just you need to write these pointers and the introduction. Okay, because it was just 3 marks. Now I have discussed this theory. Listen, the real thing is left. I am going to solve the whole question on Excel. But for that thing, if you want to take the picture, you are most welcome. You are most welcome. See, this is the question. If you want to take the picture of the question, most welcome. Then these are some URP workings. If you want to do this, if you want to copy this, or if you want to write this, you can do. Okay. NCI thing as well. One thing which I would like to share with you guys, remember there is a P2S sale of 25,000. There was a P2S sale of 25,000. Now in the income statement, P2S sale has got only two steps. Whatever is the amount of transaction, see 25,000. This 25,000 will be removed from consolidated sales and consolidated cost of sale. This is the first step. And then this URP. This URP will be added in consolidated cost of sales. This URP will be added in consolidated cost of sales. Only two steps for P2S sale. Okay. And in case of P2A, only one step. Only one step. In P2A sale, we never adjust sales. We only adjust cost of sales. Okay. This amount of adjustment will be adjusted in consolidated cost of sales. Now listen, there are some workings which I have already covered here. There are some workings which I have already covered here. So I won't be doing in the Excel sheet again because we need to save time as well. Okay. Okay. So now we are moving towards this Excel part. Okay. This Excel part we are moving. Listen. So the first thing is consolidated revenue. Let me write here for consolidated revenue. Now listen. Adding together will only be done between parent and subsidiary. Parent and subsidiary. Be careful. So parent company is with me for the whole year. So I will add complete sales, cost of sales of parent company. So what is the amount of parent company here? It's going to be 915000 plus what about the subsidiary? Subsidiary you have 534,000. Subsidiary you have 534,000 times 9 upon 12. Everything will be 9 upon 12. Everything will be 9 upon 12. Now, hope you remember there is a P2S sale as well. So the P2S sale was 25,000. So we'll remove it. We'll remove that thing. Okay. Now let's calculate the total. The total will come out to be equal to 915 plus 534,000 times 9 upon 12 plus, sorry, it's minus 129050. 129050 is the answer. Okay, for this 129050 is your sales. The first thing is done. Now come to cost of sales. Yes, cost of sale is the big thing, I'm telling you right now. So what is the cost of sales number? The cost of sale number is for parent company it's 470,000 plus for subsidiary company it's going to be 9 upon 12. So 132,000. Keep the question with you. Please keep the question with you. It will be easier for you to understand then. 132,000 times 9 upon 12. Okay, now wait. Next thing is plus, sorry, minus. You have deducted 25,000 from sales. The same 25,000 will be deducted from cost of sales. Then you need to add URP. URP was I think 1620 for this transaction. Then you need to add 1500 of excess depreciation. Yes. Then you need to add the URP for P2A, P2 associate. P2 associate URP was 2360. 2360. Okay. Okay, right now let's jump here and let's calculate these things. So equal to 470,000 plus bracket open 132,000 into 9.12 times 9 divided by 12 bracket close. Then you have minus 25,000. Then you have plus 1620. Then you have plus 1500. Then you have plus 2360. 549480. 549480. Okay. Now gross profit, how will you calculate? This will be equal to this minus this. 741020 is your gross profit. 741020 is your gross profit. Now distribution cost is very simple. Adding together parent company's complete data and S company's data into 9 upon 12. Okay, right here. So it will be 68,000 for parent company. Then you have plus bracket open and 36,000 into 9 upon 12. 36,000 times 9 divided by 12. So equal plus 36,000 for it into 9 divided by 12 bracket close 95,000. Okay, now you have admin expenses. So admin expenses will be How much? Again, parent company is full and S company is times 9 upon 12. Okay, so parent company's admin expenses are 92,000. Then you have plus bracket open 34,550. Your admin expenses are 34,550. 34,550 times 9 upon 12. Equal 92,000 plus 117912.5 or 913. Okay, now the next thing is you need to calculate share of profit from associate. Now wait, just for your easiness, just to save the time, I have already written the names here on the left hand side. Okay, just to save our time, but in the exam you need to write it yourself. In the examination you need to write it yourself. Be careful. Now next, so share of profit from associate, you know, for associate you never do adding together, you just do one line adjustment, and then that one line adjustment is associate company's profit after tax multiplied by your holding percentage. So yes, associate is with us for the whole year, associate with is us for the whole year, right? You see that, you remember the dates, you go and check in the question. So associate company's profit after tax was 113050, 113050 with no adjustments at all, because there is no S to P, A to P sale, only P2A sale. So 1130 into 0.35, 35%. Okay, equal 113050 into 0.35, 39568 or 567.5. It's perfect. Then yes, investment income I have taught you in detail. I have given you time right now on my iPad, remember? So now I'm just going to 56,500, then subtract your dividend income. Wait, first add the 9 upon 12 of subsidiary. Wait, first add the subsidiary. 8,000 times 9 upon 12. Wait, now remember I have subtracted many things. Now the first thing is 5,000 interest income intra group. Then dividend from subsidiary was 11050. Then dividend from associate was 10150. I have covered all these things in detail with you with my pen, remember? So now it's going to be equal, 56,500 plus 8,000 into plus, then we have minus 5,000 minus 11050 36,300. Okay, now then you have finance cost. Parent company's finance cost is purely independent finance cost. Okay, 15,000, but sorry, parent company's finance income is pure 15,000 plus. Now for subsidiary, use your brain. For subsidiary, out of 13,000, 5,000 was purely intercompany, so remove it. 13,000 minus 5,000, just remove it, and then do 9 upon 12, then do 9 divided by 12. Okay, so let's apply it. Sorry, equal to 15,000 plus bracket open 13,000 minus 5,000 times 21,000. Okay, now you will come to know the profit before tax. Okay, now how to calculate profit before tax? Equal to, first this is gross profit. See, few things we have to subtract, few things I have written everything positive. Be careful, this is Excel. Gross profit, distribution costs and admin costs are expenses, so this will be deducted, minus this, then minus this, then plus associate share of profit will be added, this is plus, then interest income plus, then you have finance costs which you are going to subtract. So 582975, 582975 is your profit before tax. 582975 is your profit before tax. See, this is your profit before tax. Okay, now income tax is very simple. Parent companies complete taxes, parent companies complete tax expenses, I think 51,500, and then you have subsidiary companies tax expense which is 43,000 into 9 upon 12, 43,000 into 9 divided by 12. Okay, so let's do it. So this will be 83750, 83750. I have already written it in negative form. So now your profit after tax will, your profit after tax will be, wait, 499225. This is profit for the year, profit after tax. Let me bold it. See, I have bolded. This is profit after tax. Now gain on revaluation. Gain on revaluation. Use your brain. Only see the question. Only OCI was related to parent company. Complete OCI was related to parent company. So parent companies, everything comes complete in this consolidation. So that is, I think, 2800. Okay. Complete 2800 will come. So your total comprehensive income will be, 50, 502 025, 502025. Okay, so your first thing is done. Now you have to write 3 lines. Now you have to write 3 lines. Now you have to write 3 lines. Hope you remember when I teach you, wait, when I teach you this thing, इन उर्दू लैंग्वेज आई यूज टू से हम ही हम करके सारा ऐड कर दिया ना मैंने, हम ही हम करके सारा ऐड कर दिया, रिमेंबर, वी एडिड एज इफ वी ओन एवरीथिंग, बट इन रियलिटी we have only 85% shares, so the NCI is 15%. So now I'm going to calculate two things. NCI, I'm going to write 3 lines for profit and then 3 lines for NCI. So first of all, I'll go here, I'll do one working. The other workings I am not doing because I have done it on my iPad. Working for NCI, listen. And yes, I have explained you this in very detail. I have already explained this as well. So your profit was, your profit for the year was, S company was, I think it was 283450, 283450. But you remember, in this 283450 there is a 5000 interest expense which purely belong to last 9 months. So first we need to add it back. First we need to add it back. I have already explained you this with the help of my pen, if your mind is sharp. Okay, so this is the amount, this is the complete 12 months amount. Now 9 months profit before that interest, wait, so this will be 288450, 288450 times 9 divided by 12. Okay, now 216337.5. Now give the complete burden of this interest expense. See, this interest expense on last 9 months, so you need to subtract this 5000. Complete, let me write in very easy language, complete burden of interest expense on last 9 months. Okay, so now you will have a correct profit. Now you will have a correct profit. One more thing, there was excess depreciation. There was excess depreciation in last 9 months, remember? And that is already 1500 apportioned, already 1500, which is apportioned. So 209, this amount. And now for NCI you need to apply 15%. You need to apply 15% on it, equal 31475 is your NCI. 31475 is your NCI. Let me hold one few seconds for you just to recall you, but I'm sure I have taught you. I have taught you. Just rewind it and check it. Just rewind it and check it. So this is the NCI for in terms of profit. Now, finally, my dear student, 31475, listen. Now, see, can you tell me what is the profit? Wait. Wait. Okay. Insert, where is the row? Okay, leave it. It will be a little bit congested, but it's okay. Now you tell me what is the total profit? Total profit including everything. This is 49925. See, the total profit was 49925. Out of this, NCI is 31475. Okay. Now can you calculate the profit attributable to the P company shareholders? Yes. This will be equal to this minus this. Wait. 46750. So first of all, I have made the three lines for profit. I have made the three lines for profit. This is the total profit. This is the total profit. Wait, this is the total profit. This is NCI, and this is profit attributable to P companies. Okay. Now again we need to write the three lines. Let me speak this in Urdu. ये हमारा हम ही हम वाला प्रॉफिट है 499225, और इसमें से इतना एनसीआई, तो बाकी पेरेंट कंपनी वालों का हिस्सा इतना है. ओके. नाउ टोटल comprehensive income, complete total comprehensive income is, wait, it's going to be 502. This one, this is complete total comprehensive income. Now what is the total comprehensive income? Listen to me, just last line, only 2 minutes. What is the total comprehensive income related to NCI? Now first of all, recall your final account. What is total comprehensive income? Total comprehensive income means profit after tax plus OCI, profit after tax plus OCI. And there is no OCI related to S company. Go and check the question. There is no OCI related to S company. So whatever is the NCI of profit, whatever is the NCI of profit, the same thing will you will write here. The same thing you will write here. See, same thing, no change. Now take the difference, equal this minus this. 470,550,549. Okay, so finally we have done it. Okay, yes. Oh, sorry. See, now I break it down. Okay, so this is the end of your question. I'll also share the Excel file with you guys. This is not difficult, not impossible. Majority things were already taught to you in the class. Just the NCI thing was new. The NCI thing, that interest thing was new. Okay. So hope you liked it. And if it is beneficial for you, share it with your friends and also comment on it. Okay. If you like it, please check it is done now. And I'll share this file with you as well in your LMS. Okay. So it's time to say goodbye. Thank you and take care. Thank you and take care.